Francis. Hello?
Yes, I'm hearing you.
Thank you. Thank you very much. You're much welcome. And do you want to say a few opening words? Anything I left out, but you would like to share with the young people of Africa?
Thank you. I hope everybody can hear me loud and clear.
Yes, we can.
Thanks. Thank you very much for this opportunity to speak to young professionals of our continent. And I know they are from different places and countries, so the time zones. So some of you are really sacrificing your evening, so that's really good. And thanks for that. So I think you covered most of the stuff. I think probably some abbreviations there may not have been so clear for everybody. So where you said FCMG is a fast-moving commercial goods, prior to working for Volkswagen, I worked for a manufacturing company that was making food for infants and breastfeeding mothers. Those are fast-moving foods. When you buy things of, Unilever, Nestle, those fast-moving commercial goods, something like that. And ICPAR means Institute of Certified Public Accountants of Rwanda. So that's really, in that summary, that's me. And I think we have quite significant time together today. So we will discuss and talk and share experience. I would love this not to be a monologue, but rather to be a dialogue where everybody brings in their opinion, but most importantly, make the best use of it. Yeah.
Absolutely. Thank you, Francis. Let's begin with the basics, like financial literacy. As a professional, because our topic today says financial literacy is a source of wealth creation. And unless you understand the movement of finance, the psychology of finance, which is money, what's financial literacy in simple terms for starters?
Yeah, thanks. Financial literacy, there's a whole lot of definitions by different people, different books, different professors, everybody defines it in their way. A banker will define financial literacy in a way that tries to drag you more to going to the bank and make money. And somebody else will define it differently. So it's also very important that you get your definition of financial literacy. So what I'll tell you what financial literacy means is what I believe is the right way to understand financial literacy, not necessarily being guided towards some commercial interests of certain business people.
Yeah.
So in my understanding and experience, financial literacy is all about being knowledgeable about money, how to make money, how to use it, how to save it, how to spend it, to save it, to invest it, to protect it, and to be well knowledgeable about money. So the decisions you make about money, what you decide to do with your money, how you want to make your money, everything you go through in that whole process. For me, it's financial literacy. Yeah. So if I think about two people, I'd like to explain with practical examples. Yeah. If you think about two people, both getting a gross salary of $10,000, right? But one person is in a country that has a tax regime where the tax on salary is 25%. The other one is paying 35%. as the pay as you earn on their salary, those two people, they are making the same amount of money, but they're taking home less money.
Yes.
So it takes basic financial literacy to know whether in which of those two countries you're going to work from if you're trying to make more money. And then you take another example of two people, both making $10,000. One is in a country where the inflation rate is at 50%. Another, like now, I live in West Africa right now, in Accra. I'm in Accra right now in Ghana. The inflation rate is in over 35, 40. There's a time it was at 50%. There are other countries in Africa right now where it's at 8%, 5%. It's temporary. It's a temporary problem. It's not being like this. Now, if you're making the same amount of money right now and somebody else in another country, it's a completely different story. By the end of the month, how much you still have, because everything you spend on is theoretically inflated by that 40%. So all that understanding of the impact of inflation on your money, the impact of macro changes in the economy on your money, understanding, where you need to put money, how you need to avoid some dubious investment scams and all that.
Sorry to interrupt, Francis. Someone must mute. Please mute.
Yeah, I think, yeah, you can mute, and then when you have to say something, you can unmute or you put up the hand, right? So it's really, for me, not a one statement. It's not just an academic one statement of define economics. Financial literacy is a whole, it's part of our lives. Yeah, it's just like telling you define yourself. You will not say I am Francis. You will define yourself. I am educated. I'm tall. I am black. I'm African. I'm this and this and this. But it's a big concept because money is part of our lives and finance is part of our lives. Okay, so everybody else works, but at the end of the day, there's one language of business, and I use this as my motivation in my job. I'm a finance profession. Everything we do, the salespeople sell, the marketing people markets, the procurement people budget stuff, the HR people do this, economists, everybody. But there's only one language of communicating success. It's financial, right? Nobody communicates success by saying, I have reached the whole world talking about the good things. But the country to be defined as growing, they'll look at the GDP, they'll look at the poverty levels going, everything is by numbers. So finance and understanding the value of money is indispensable. It's part of your life. So when you accept it and you understand it, good for you. If you turn a deaf ear and you look the other way, good for you. So in a short story that I've made long, that is how I understand financial literacy.
That's interesting, Francis, because you find people say, okay, I've done this and I've done this. Like, that's an interesting aspect of looking at finance, because at the end of the day, the equilibrium is finance. How successful you are is how you multiply your finances. That's really an interesting way of looking at the things. You see these famous vloggers that have traveled the whole world, but when the finances is not well fixed, so the success for sure is the enabler is finance, which is very important for young people. And so you mentioned something very, 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 very serious, like finance. It's understanding in very, very various aspects. Taxes, the tax regimes where you work, and every circumstance, inflation rates, etc., etc. So, what are some of the ways? What are one of the few ways, good habits of financial literacy that can help young leaders? The little they earn, but also they can maximize it. one of my business mentors says that it's not about how much you earn. It's about the attitude you bring to how much you earn. So what do you say about that?
There are quite a number of certain things, certain behaviors, certain ways of living you can use to improve your financial literacy. But I would like to take it in a systematic way, kind of. So if you allow me, I'm going to put up something, just very brief.
Sure.
Okay. Okay, I'm not able to share. Can you just turn me into?
Yes.
Okay. I'm still not able to, but I'll probably have to talk about it.
How about now, when I made you a co-host?
Okay, now it's possible. Thank you very much. Yeah. All right, so you guys will let me know when you see my screen. It's just a small guidance here. Can you see it?
Yeah, we can see. So, we can say blank space.
Hmm?
We can say blank space. We don't see something.
No content. You don't see any content.
Yeah. Don't see any content.
Okay. One more time. How about now?
Not yet.
Okay. I'll just do stop share and I try to share again. Yeah. Now it should be better.
Yes.
Yes.
All right. So basically, if you see this just on top here, what this, I'm sure everybody knows something about Warren Buffett when he says, if you buy things you don't need, you will end up selling the things you need. That's a very, very important statement from an experienced person. But briefly, what I would like to take you through is what I was summarizing for ease of following is if you just skip this picture here, just come down here, the components of financial literacy. In the whole definition of financial literacy, I was talking about, you need to earn money, you need to spend money, you need to save money. Now, the first two, if you earn money, you have to spend money. This one is part, right? It's like, just like there's a metaphor we use, it's like a chicken and egg kind of thing. Yeah. Right? It's one leads to the other, because if you're earning money, you have to spend, then you have to save, and there is investment, there is borrowing, and then there is one last important part, yeah, which is protection. This one here, to protect, and this is very important. Now, from my experience, most young people, and here you're not speaking to some expert who has made it in life. I've been through this whole phase and I'm still learning every day. All right. And I've made some silly mistakes, yeah, in the past as well. Cannot rule out that I will not make any more because it's part of life. The most important is to learn. The problem is we tend to not focus on earning, and we start trying to manage. When you manage scarcity, it won't help because you're really managing what you don't have. So it has to start from, you need to understand when we talk about financial literacy and you are not earning money, the biggest thing that should keep you awake every day is, how do I make money? right?
Yeah.
Because you will not start an investment fund. You will not open a savings account when you're not earning money. So when I look at the trend, I look at my country, I look at Africa, look at most young people, you realize that we sometimes tend to immediately theoretically run to trying and understand, saving, investment and everything, but we are not growing our income. And that's a big problem. So we have to be aggressive about growing our income. That's earning, right? You have to earn money. If you are in school, if you are in university, you have to prepare yourself. You have to be top of your class. You have to be prepared. You have to look out on the opportunities around you. You have to know which sectors you're looking for. You have to know what are you targeting. Then you're opening your doors for the earning level, which is the first part of financial literacy, right? And then spending, I'll not talk much about spending. Who doesn't know spending? Everybody here knows about spending, right? We all know about spending. We even spend money we don't have. If I gave you money, you would spend it, right? But if I showed you money and I say, you earn this money, then you have to say, how do I earn that money? That's the problem with earning. It requires you to put a skin in the game. But spending just requires you to show up with money and it's gone, right? Now, saving and investment. The biggest problem I see here, and by the way, on investing here, I learned this recently, a few years ago. When I was in my 25, 28, around 28, around there, I looked at asset and liability from the accounting language. In accounting, anything that is helping the business to generate its products, the vehicle, the land, the building, the computer that I'm using, all those are assets. In liabilities is money or others. Quite simple. Now, in your personal finances, unfortunately, if you have something that is depreciating, you cannot call it an asset. You only call something an asset if it is generating income for you. Okay? So the question is, what should you take a loan to purchase a liability? Then you're getting two liabilities, right? So imagine I take a loan from a bank at an interest of 18%, and I purchase something that is losing value every year. That losing value is already a liability. And then I get a loan to buy that liability. So I'm taking a liability to buy a liability. And I made that mistake, because I took a loan and I bought a liability. And then afterwards I realized, but I'm spending money at the bank, I'm paying interest. Every week I'm going also to the garage because I'm having another liability. What exactly am I doing here? And then when I started looking at the splitting the payment part, I pay this amount every month. How much of it is principal? How much of it is interest? And then I realized the interest I was paying was high. It was too much. And every time it was going up. And then I realized that here I'm being stupid. I need to stop this loan, right? So what should I do? I need to take care of this liability. I need to get it out of my way. Otherwise, I am working so hard overnight to make a lot of money, and all the money is going through my hands and going through the window, going to somebody else. That is very, very important for you to understand that when you talk about investment, you cannot invest in depreciating things because those are not assets. Invest in appreciating things or things which will help you earn passive income. Now that's a financial word, I believe. Do you guys understand the meaning of passive income? Passive income is just income you earn without waking up in the morning and queuing to work or typing emails and showing up and checking in and working. If I'm sitting here and I've got a rental somewhere and every month I'm getting some money, that's passive income. Okay. But if I have a side gig that I have to leave in the evening and go provide a lecture, that is not side income. It's not, sorry, passive income, because I am going to spend my time and my energy and that money. If I fall sick that day, that money is not coming, but the tenant will still pay. That's passive income. So when you invest in an asset which brings passive income, it's okay to come to borrow. Okay. So because these two now go hand in hand, you can borrow. The question is, if you borrow, what you're investing in, how does the return on your investment and the cost of your borrowing compare? Okay. I have borrowed money to purchase a property. But when I did the calculation, the bank told me, it's better you pay longer. Yeah, it's more easier for you and convenient. Then I looked at the finance cost I would pay over 15 years.
Mm.
And I looked at the interest I would pay if I would pay in 5 years. And it was unbelievably so different, 2 worlds apart. And then I looked at what would be if I buy this house and I don't rent, the cost of rent versus the interest I'm paying. And
Wow.
then I do that math. I sit on my computer, I go in Excel and I do the comparison. And I realize that if I take this loan and I'm paying over 15 years, the interest I'll pay is equivalent to rent of about 30 years, 35 years. And I was like, this is not worth it, right? But if I pay it in 5 years, quickly, it will be okay. Because in 5 years, the loan is gone. And then this property, if I value it in 5 years, I can still make money. So I am not losing money. So I go to the bank, I need this loan. And every time I would go get some money, make a down payment, push it, 4 years, I'm done with the loan. I have my property. And then I do my math and I realize now my property, the value it has, if I look at the interest I paid, plus the cost I bought the property, the value it has right now, and the cost it is saving me from spending on rent, I think I'm in positive. That investment for me, it was the first right investment I made. The first one was a bad investment because I invested in a depreciating asset. And then after some time, the asset was old, it was selling for less, and the interest was still going, and I was still paying. And I found myself having two liabilities sitting. One is a loan in cash, another one is a physical liability. So you have to be able to do that math. Okay? And that is why financial literacy is nothing. If you yourself, you don't work on your own literacy, you have to be, you have to be smart. Yeah. You have to be, let's use an informal, you have to be smart. You have to be smart. You have to be able to understand what am I going to do? And you have to be very careful because these days, there are financial scams everywhere. In years before our generation, the financial scams were easy to know. Okay, you just meet somebody there and he's telling you things there. But today, the financial scams are everywhere, on the internet, everywhere. Everybody is trying to scam you somehow, somewhere. Right? I have to be respectful and choose my words carefully. I cannot say the banks are trying to scam, but everybody is looking at their business interest.
Absolutely.
Right?
Yes.
And if you don't be careful, you are caught in the mix and you spend your life working, but you're actually not making any progress because you're not making the right decisions. You're not making the right decision. This virus of credit cards that has taken us all, yeah, everything we live on is on card, is on credit, is on credit, is on credit. I was speaking to my friend the other day who lives in Arizona in the US, and he told me, how it's not only in US, by the way, how you go to the ATM of another bank, yeah, and then they charge you more. Today I used my card from another country and I used on the ATM and looked at how much they were charging me. But I had to accept because I needed it. But only because it was necessary. So I have no regrets for that. However, you will spend money going to different ATMs or a different bank, and you're spending 4 times higher than what you should have spent, and you're you're swiping your card 2 times a day. And at the end of the month, look at how much you're losing is a lot. And it's not necessary. You can avoid it. So for me, financial literacy, as I grow, I've started learning even today, take care of the small details, which I never used to look at.
Yeah.
Small details like the cost, small costs, unnecessary costs. Small, unnecessary costs. Shopping, right? You cannot go in a shop. You're a young person, you will get a job. When I got my first job and I got my first salary, I told my friend, let's go out, and I take them out. There's a lot of money on the account, but I don't know how that money left. Quickly, but because simply taking out small. Don't be somebody who walks in a shopping mall and you see something nice and you say, I can buy this. Go with a plan. Okay. So me, what I do, maybe if you could take my advice, if I have no plan of buying something, I don't go in a shopping, I don't go in a mall at all. I don't go around with a stroller just to get out, to go around and get out. I go in. If I don't know where it is, I ask, I'm looking for this and this. They take me where it is, I pick it, I get out. When I want something else, I come back. If I don't want something to buy, I don't go. Okay. So you have to learn habits of detracting you from being extravagant. Extravagancy is a very dangerous thing. And it's all over us. It's all over us. You're extravagant even when you're sober. Now imagine if you have a few and then you're not sober, then your level of extravagance goes overboard. All right. And so all those, they are not 1, 2, 3. So the way I'm explaining them, I'm not giving you a long list because I don't necessarily want you to go back after 5 days and start looking at the notes. And I want you to listen now, right? You get it into your head. And when you get out of here, you've learned something better. So I can try to make it as a summary. You have to budget. You have to know out of my income how much I'm going to spend, how much I have to save, how much I need to invest. Number 2, also, you have to look into the future. You have to invest in the future. Very important. Okay. You have to invest in the future. You have to avoid bad credit. Bad credit, I gave you an example. Do not take credit to invest in depreciating things. Take credit to invest in appreciating things or things which will help you to earn passive income. Number 4, improve your earnings. All right. Look for something. Look for something. Look for something. I always touch base with my friends and we talk about how do we make more money? Like every time I'm thinking about how do I make a bit more, don't be comfortable. I wouldn't love to see a 28-year-old person being comfortable there because you're making $1,000. No, don't be comfortable. Scratch your head, find something. There is a side gig somewhere, do it. There is a single, just try, to maintain some reasonable work-life balance. It's never really black and white. You always feel overworked. It's part of success. You always be overworked. But try to work hard and invest. Try to avoid bad credit. Do not take unnecessary credit. Budget your spending. Read some resources. There are resources everywhere. There are some books. These are some of the some books which I have only read a few. I have to admit, I'm not very good at sitting and reading a physical book. Okay, that's my problem, but I try to get other resources. But I've read this book here, Think and Grow Rich by Napoleon Hill, so many years ago in my first year at university. I read it page by page. And up to now, I still remember some concepts. I've also read this book of Robert Kiyosaki.
Yeah.
So there are quite a number of books, okay, that you can read. And today we live in a world of resources, my friends. Everywhere you click on internet is there. But I want to warn you, do not spend a whole day reading. Huh? You spend some little time finding knowledge, then ask yourself, how do I actively, like practically use this knowledge to improve myself? You have to improve yourself. Let's say me, I'm in a finance profession. Okay. When I was at university, I wanted to become a top accountant. It was my dream from the time I stepped a foot at the College of Business and Economics. I had to get a certification of CPA, Certified Public Accountant. And then when I started working, I realized I needed more soft skills. I had to do another certification in financial modeling. Yeah, because I was realizing it's part of my job. And today I have another course that is on my list, but I want to tick off. I am trying to stay relevant. Yeah? In the field you are in, you have to stay relevant. If you are a lawyer, you have to upskill yourself. You have to get more skills. If you're an accountant, you have to get certified. You have to become a CPA, CFA, CMA, anything. But you have to skill yourself. You have to be relevant. So once you work on yourself, it creates the confidence in you. You become confident. Your earning levels start going up. People start looking for you and you start making a bit of more income. And then it gives you the opportunity to think big. When you're getting income, you think big. When you're not getting income, there is no chance you'll talk about these things we're talking about here. You're in financial distress. You're worried. You are insecure. You're thinking today is gone. What about tomorrow? The moment you feel comfortable because you've got experience, you've got the skills, they call you in the interview, you say, me, I come from my school, I'm number one. I've worked at the first company. These are my deliverables. This is my success. You give me a job, I'll change this and this. And then they appreciate you. So you start by being the best in the field you're in. Before you start investing everywhere your money, you be the best in your field. Are you a lawyer? Are you an accountant? Are you a doctor? Are you anything you're doing? Be top of your game. I assure you, if you are the best in your area, there is no way that you will become hopeless and irrelevant. You will become relevant, you will grow. Once you start growing, then this concept of financial literacy become relevant, because financial literacy is only relevant if you're actually making money. Okay, so that's what I can try
Wow.
to explain about financial literacy
Mhm.
and how some best practices you can use to become more literate and become friends with your money.
Excellent. Thanks a lot. That's really like a big lecture, about finance. My favorite book that is The Richest Man in Babylon. Very simple book, straightforward, ancient knowledge, even inspired people like Napoleon Hill, inspired, like very simple. Investing, it's simple, so you can even read it in a week. Even actually, a week is big. 3 days you can finish that book. So read the books, read The Richest Investor. They're very, very good books. And right now, I'm sure people have a lot of questions. I want to open it to the audience and people ask questions. Please ask questions about finance. What's your dilemma on finance? Which spirit gets you when you see money? When you see money coming to your account, how are you excited? What's the mentality about money you bring? So bring your questions. They're here to be answered. So if you have any question, just raise your hand and ask it. Any question? Okay, Tualani, yes. You say where you're from and ask a question and be brief.
Okay, good day, everybody. I'm actually Toluwani from Nigeria. And my question is, you talked about, Mr. Francis, you talked about passive income. So what are some reliable passive income channels you think we could invest in that could get us passive income? That's my question. Thank you.
Enoch, do I answer one question at a time, or we take?
You want to take?
Maybe we take a few. We take a round of questions, and then I answer them.
Excellent, no problem. Happiness.
Yeah, good evening, everyone.
Hello.
Hello, good evening.
We hear you.
Can you hear me? So,
yeah.
I had a short scheme of my voice. I lost my voice, but I can manage it. But I'll put my question on the screen, but I still want to repeat it. I was trying to look at how can I improve in my organizational financial literacy cash flow in terms of my carrying out a financial budgeting planning for my community project. So it was on the screen. I tried to look at say financial literacy along with my organizational finances, how to manage the cash flow. And also I want to know how I can manage the financial literacy in terms of my principles, borrowing and all the rest, so how I can pay back, because mine is not a profit organization. I'm not profit organization, I'm not profit. I'm trying to know how I can pay back without donation or funders supporting me. And the last one is how I can invest, whether this investment has to do with share or any of the investments. You can give me kind of enlightenment on it. Thank you.
Thanks. Happiness. One more question, and we'll first answer those ones. The Salan.
Hello, everyone. Thank you so much. It was a very interesting discussion. It is. And thank you, Francis. Yes, when Francis talked about assets and liability, he said that asset is not something that takes your money from your pocket. But here in Ethiopia, most of the financial institutions, especially the credit associations, they provide money for youngsters, and just borrowing money from financial institution and purchasing or buying a car and a home or house is very common. So our cars and home are assets. Can we consider them? One. And the second question is that Robert Kiyosaki, in his famous book, Rich Dad and Poor Dad, he used to say that all those people with financial literacy are good when they can understand money makes money. Unless, no matter that you earn, it is nothing. So let your money to make for you. Is that right? Or how can we consider that money, if money is making money, how can it be a financial literacy? I need more explanation here. Thank you so much.
Okay, Francis. Just to remind the audience, our session lasts for 1 hour and 30 minutes. So just to keep time in our perspective. Go ahead, Francis.
Okay, thank you. Thanks. Very, very important questions, and I'll try to address them to my best knowledge. So I would like to just start with the last question here from the Salan from Ethiopia, where you say if cars and homes should be considered as assets and liabilities. Now, this one is a very interesting concept that up to now many people have different views. And like I've told you, I'm one of those who had completely different view, and I came to accept one thing. So as a finance professional, anything that you purchase that helps your business or whatever you are invested in is an asset. That is from a finance and accounting. That's from a business finance point of view. So your vehicle is an asset. Your house is an asset because they all help you to run your operations. When you come to a personal financing, however, when you think about an asset in your personal finance, an asset for you in your personal finance, your money, should be something that you have that is either increasing your value or earning you income. But if it is something that is taking money from you, and here, when I'm talking about taking money from you, I don't mean that you're paying the bank for it. No. If I take a loan and I bought land, because I'm paying the bank for that land, it does not make the land a liability for me. The land itself is not costing me money on it. I'm just paying somebody who gave me their money, which is part of life. When somebody lends you money, you pay back. The point is, if you have something and you're spending money on it, right, or is not increasing the value, but you're spending money on it, is not an asset. You have to accept. An example I can give you is a vehicle, right? I took a loan to buy a car some years back, but I will not shy away to tell you that car was not an asset for me. It was not an asset for me because that car was not generating income. Okay, that car was not increasing in value, but the loan I was paying interest. Okay, now you can say, oh no, if you didn't have the car, you could take a taxi, you could pay money, but yes, I put fuel in the car and I have to change oil and I have to spend on after sales as well. I have to pay insurance for the car. I have to pay the technical, mandatory technical inspection and all that, and all that, and all that, and all that. That one makes that vehicle a liability for you. However, I don't want you guys to look at this thing as extreme. You go to the bank and say, take back your money, let's throw the car away. No. You have to know when to differentiate between needs and wants. Okay? If you in your life, you need a car, I'm going to use a car as the example. There are a lot of other things. If you know that you need a car, then you must get it. Consider it like a need. Imagine you're sick and you need money to go to the hospital and you don't have it, but the bank is willing to lend you money. Are you going to sit back and say, no, this is a bad loan? Absolutely not. But if you want to take a vacation and you need to borrow money from a bank, you will not compare it to the one you're taking your mother to the hospital when she was sick. So that's the difference between a want, a vacation, and a need, medical attention. When you borrow money for a need, the financial concept thing you're talking about, they are not relevant because a need has to be taken care of. That's why if you need that depreciating asset for your life to live a normal minimum standard life, then consider it as a need, but it does not make that asset and that item an asset. It remains a liability. So the definition still remains, if you invest in something that is growing in value higher than the cost you're spending on the loan, it is an asset. If you invest in something, you've spent 18% every year with the bank for 15 years, and every year that item value is going down, it's not an asset. It's not an asset. So you have to know when is a need and not a need. Otherwise, anything that is reducing in value every year, anything that is getting old, every year, mileage is higher, your car is old. Every year, something is older. It's not an asset. So it has to be something that, think about examples, by the way. Let's be more practical. I'm going to give an example which may not sound okay for educated people, but think about people who invest in agribusiness. If you buy a goat, okay, or a cow, if you buy it today, after 6 months, it has grown. The value has increased. After 2 years, you don't have one cow, unless it's a bull. You have two,
Yeah.
right? After 3 years, you probably have three. That is an example of an appreciating asset, okay? If you buy land, everywhere in the world, land appreciates. There is nowhere in the world that land does not appreciate. That is why we accountants, we do not depreciate land. We actually revalue land and increase the value. All the other assets in this world, they depreciate. Land does not appreciate. So land is an appreciating asset, okay? And sometimes I bought a house standing on a piece of land. And sometimes we say, oh, this house has appreciated. The house depreciates, but the land where it is sitting appreciates. So when in 5 years, your house has a higher value, you might think your house has grown in value, but what can grow in value about a house? What can grow in value about a house? The sheets are getting older, the floor is getting older, the ceiling is getting older, everything is getting older. The only thing is the house is sitting on gold or land. So the land grows in value. So when you are investing in a house and the land value is $10,000, the house value is $90,000. And somebody else is investing in a property where the land value is 50,000, small house of $10,000. The person where land has more value with a bigger space of land may have made a better investment than you, who has a very nice house on a small piece of it. So all these are things you have to look at and know which of my property appreciates. It is land. So I need to get land in a decent location. Okay? So that after a few years, my value will grow. But if I go build a very nice house in a remote land, it has low value. You're missing the point. Because the value is not your house, the value is your land. So I hope I've tried to address that. Okay. And then lastly, your last question was about what Robert Kiyosaki said, that we have to understand that money makes money, otherwise it's pointless. Absolutely, we cannot agree more. So that money makes money part is what I talked about, is what generates your passive income. There's what we call, what is the name? What is the name? It has slipped through the cracks. It is called the compounding. You know, for those who remember your mathematics, compounding concept, interest. You see, the bank takes money from Enoch. He puts a deposit in his account. The bank uses that money to lend it to me and makes interest. They are not going to pay Enoch interest. They get interest from me. They get the interest they have got from me. They lend it to Enoch and they make interest. Now, you get your profit and you use your profit to make profit. You have grown your profit 2 times. All right. The same 10,000 Enoch brought in a bank was loaned to me. I give a bank 20%, which is 2,000. Somebody else gets a loan of 2,000. They pay 20%. They pay 400. And then somebody comes for it. It goes around and around. And within 1 year, 10,000 has made 50,000 for the bank. Money is making what? Money. That is the concept that gentleman meant. But we are all not going to start a bank, obviously. But what can we do? Okay? If you put your money in something that is growing in value and you get money from it and you invest it, if you invest in stocks, in shares, in growing companies, and you get returns and you reinvest, you are making a lot of money. You're making a lot of money. So that is what he meant. But obviously, one step at a time. For you to reach at a level where your money makes money, you must have a good amount of it in your account, you know? Right? So when you're starting to invest small, you're only earning on your first principal. But when your investment grows and you start looking at your return and say, this money on my account is my return from my investment, and I want to invest it again. That is money going to make money for you. Okay. Then I'll answer a question from Tolwani from Nigeria. Was asking about some reliable passive income that we can invest in. Well, I am not very much familiar with the Nigerian economy, so I cannot be very specific and say invest here and here and here. But I can give you a general overview and you make an analysis for yourself, right? So the first thing is, I appreciate that you understand the meaning of passive income. Something you put in your money and your money is making money while you're sleeping or you're sitting here. Sorry, just you're sitting here and your money is working. That is passive income. So there is, in Africa right now, there is a growing industry called real estate. Okay, so real estate sector in Africa, particularly here in West Africa, is growing at a very, it's like a hockey stick, is growing up like this. Now, that means there is a lot of potential. However, you need to have a lot of money to invest in it.
Mhm.
So if you can get financing and you invest there, there are now new models where property developers, some time back, and also it happens where you just go buy a house and then you look for brokers, help me find tenants, and then you spend 6 weeks or months without tenant. There are new models where property developers, they come and people have money. Say Enoch comes here as an investor, puts up a mega structure with hundreds of apartments and studios and townhouses, probably. And then they manage it for you. You buy it, they manage it, they guarantee your income. All you have to do is look at how much income am I getting? I get money from the bank. What is the finance cost? Pay it over how long? How much am I going to be making? Within this many years, I'm done with the loan. I'm still earning my money and I'm still making money. So that's an example. But that's quite expensive. Not for anybody to afford $100,000 or plus to buy these real estates. So you can find other ways. I can advise you, if you have plenty of, think about agribusiness. Okay, agribusiness is also something that can work. It requires more time. It's not entirely passive income. To be very clear, it's not entirely passive income because you have to really sweat. But this is one thing you can put in your money, and it's growing. The market is there. The demand is there. The president of African Development Bank said that as technology grows, everything is becoming digital. But there's one thing that will never change. People will never people will never buy food. They will never transfer food through Wi-Fi, and people will never take petrol for water. So there's always going to be need for food. Okay, food is going to be need there. Whether the world grows, artificial intelligence comes, everything. We humans are not going to eat Wi-Fi. We're not going to eat AI and all that. We're going to eat food. So think about putting your money in something that is on high demand in your community. So I want to challenge you. Instead of telling you invest here and here and here, because all African countries are blessed differently, okay? Differently. You make an assessment in your region, in your community, in your country. What are the needs which are there? And where can you put your little money? And you start earning. Do not focus on making big money. Be careful with the scammers, okay? There are a lot of pyramid schemes and all that. As long as you're making little money, but there is an extra money you're making, go for it. Then happiness from Nigeria. Your second question was not very clear for me, but I'll start with the easy one. How can you improve your organizational financial literacy in handling cash flows, budgeting for a community project without sponsorship? Now, this is what I do. This is the best question for me because my job is to fix cash flow problems of the company I work for. The first thing you need to do, happiness, is that you have to minimize what we call fixed costs. You know what fixed costs are? Your salaries, rent, all those things. The things you pay with or without income, those ones have to be kept to a minimum. You have to be very careful that your fixed costs are very low. So what I do when I'm planning for cash flow, I make sure that the fixed cost cannot be higher than the minimum income I have to get for the company. So if you have your guaranteed donation, your guaranteed income that is coming, make sure your fixed costs are within that range so that even on the worst day, you can still survive. And then the second thing with cash flow management is planning. During COVID, there was crisis everywhere, and I was in charge of finance, and I used to do a weekly cash flow plan. Every week, I would do scenarios. Even now, I run scenarios, rolling forecast, budgeting, planning around 5 years, 1 year, monthly cash flow planning. So you have to do scenarios and ask yourself, if the following money comes in, where will I spend? What about the worst case scenario? We do normally the best case scenario, optimistic scenario, and the pessimistic scenario. You run the scenarios, you look at the worst case scenario. If no donation comes, what will I do? You be realistic to yourself. If you have to cut costs, if you have to put some contracts on hold, you have to be bold and do that. The most important, look at your money. Okay. There's some I read sometime when I was doing my financial analysis model course that the guy who said, if you have a startup, cash flow is more important than your mother. That was quite ice cold, but the moral of the story is that cash flow is the most important thing for your small business. Okay. And then how can I manage my financial and clear out the principal and interest rate borrow for a project without any assistance? Well, you know, the questions you're asking here are really, they're quite categorical. It's like saying, how can I buy a pizza if I don't have money in my pockets? The answer really is never going to be, there's a way you can talk to the lady there and say, I'll come tomorrow. I'll not tell you that. Point is, if you take credit, you must have means to pay it. If you have a loan, you have principal and interest, and you don't have donations, and you're calling it donations, but I'm trying to just be high level, it's income. If you take a loan and you agree to the terms of the loan, if you agree to monthly payment, make sure you have a stable monthly income. Otherwise, you're in trouble. Okay. So at this point, if you have a loan and your income has stopped, it's unfortunate that I cannot find an easy fix for you, or anybody can find an easy fix for you than saying you renegotiate with your bank. But most importantly, from the questions I'm seeing, you must be a very creative businessman. Find income, pay off the loan, and stay loan free. Okay, that will be the best advice I can give you. You take the loan. If you take the loan and the monthly pay to the bank is $1,000, but every month you have a minimum of $30,000, you'll never have a problem. But if your monthly payment is higher than your minimum income, then you have a problem. So these are questions you have to ask yourself before you take the loan. Okay, before you take the loan. And there are so many people who can help with that. I personally, I do help people with personal financing and small business financing. If anybody ever wants to talk to me, that's fine. But you have to make the decision early enough. Look at what you're going to pay. How much are you making? If you feel you're worried, hold your horses. Your last question, how can I invest for the future? Buy shares, enlighten my knowledge. Well, this is quite, we've talked about this, I think. There are many companies that where you can invest in shares. I cannot know the process in each country, but I know in every country there are brokers. If you look for the institution in charge of the stock exchange in your country or capital markets, even if you go to their website, you will find something, and you can invest your money. Look at the performance of the company. The companies which sell shares, they publish their financial statements. Have some knowledge on looking at financial statements. Look at past 4 or 5 years, how they're performing, look at their ratios, their asset base, look at how they're doing, look at how they're growing. If you see a projected growth and you look at their plans, and you see they have plans of growing, invest your money there. So do your homework. That's all I can tell you. If I am to invest in shares, I'll spend probably a week reading about the company. And if I know some people there, I'll ask them. Thank you.
Wow. Excellent. Well answered. So we have 3 questions here. I see hands. One is Michaeas. Michaeas, ask your question real quick. Just to remind the audience, it's 8 minutes past the 1 hour. So we have 12 minutes. 12, yeah, because 1.5. We have 20 minutes to finish. So let's try to be short and clear. So make us ask your question, then Kunda, you ask yours. And there's this person without the name label. Please indicate your name on the screen. Go ahead, make us. Okay, so but he has a question here. I think there's someone.
Can you hear me? Am I audible, please?
Okay, please, yes. Go ahead, yeah.
Am I audible, right?
Yes, go ahead.
Okay, thank you very much. My name is Mikias Brahanu from Ethiopia, and I like our today's sessions. And my brief question for Mr. Francis is, what thing do you suggest for the role in terms of the role of habit and the patterns, which means the role of our habit formations and adjusting our spending pattern, the role of adjusting our spending pattern toward financial literacies. I want to know this question. Thank you very much.
Thank you. So Ankunda. You there?
Yes, please. Good evening. I'm very thankful for this session. Thank you, Mr. Francis, for enlightening us. My question, I hope I'm audible. My question is about, first of all, the vintage cars. The vintage cars, do they also depreciate with time? For instance, you know, the longer you keep a car, if it's worth it, the more its pricing goes up, depending on the brand. And also, I had a question on real estate. In my country, for instance, real estate is a bit. I'm from Uganda.
Okay, cool. Yes.
And in my country, real estate is a bit overpriced. I think that is the word I would use, because the prices for the houses, there is a way they highly tax them, in that people are no longer interested in real estate. People are interested in development of their own from the ground. So I don't know if there would be anything that would like help guide someone that would be interested in putting them on a cheap scale or something of that sort. Thank you very much.
Thanks, Ankunda. Tango, Philly.
It's Tonga.
Tonga.
My question is quite short. I wanted to know what percentages we should use in terms of how to manage our finances. Like, what percentage of our total income should go into savings, should go into expenses? Maybe if you're paying off a mortgage, how do we navigate how much in terms of the percentage of the total income should go towards those things?
And where are you from, Tonga?
Oh, I'm from Zambia.
Okay, Zambia. Perfect. Awesome. Yeah, I think Francis, you can take it from there.
Thank you very much. Very interesting questions. I'll start with the question from Matthias from Ethiopia. How do you suggest he asked a question about habits with regard to spending patterns. And now on this one, what I can say is with regard to spending patterns and the best habits, I touched on it briefly earlier in the earlier discussions, but I can try to just shed more light on it. This one does not, I don't believe it has a global definition, but I can only try to share from my own experience. The best ways to have a good spending habit is to have a plan. Yeah. There are people, and this used to happen to me when I was still young, it used to happen to me that you don't have from Monday to Sunday, you buy when you realize you're missing something. Yeah. You walk in the kitchen and oh, there's nothing, and then you buy. And then you go in, you look for socks. What happened? They're all old and gone. Then you buy socks that evening, and you buy clothes when you wake up one day and you realize you're out of stock. That kind of spending does not help you plan your money. So how I started improving, and here I'm still a work in progress again, is that I plan the frequency of buying clothes. Okay. And I say when I'm going to buy clothes, I'll buy jeans, I'll buy this, I'll buy this, I'll buy these shoes, and I stock them. You know, obviously the experience is different if you're a lady, because, you know, as a guy, I don't have to change clothes so frequently. It's much different. But either way, there is a pattern. And then when it comes to shopping groceries, I do it weekly. Okay. Weekly, I shop once. Things needed in the house, we shop them and that's it. Okay? That helps me to not be buying small stuff in the course of the week. So when you do that, you master your spending pattern. And when you get your income, you know how much is going to go for buying groceries, because every week I know I'll spend, let's say, $100. So you know that $400 is going to go here. So I keep it here. Okay. So when you spend in a planned way, it helps you. The other thing is what I talked about. You stop buying unnecessary stuff. Okay. Stop buying unnecessary stuff. Really. And when you stop buying unnecessary stuff, it helps you to build the discipline. Okay. To build the discipline. I have a friend of mine. I'll give you a funny example. He's a very good friend of mine, but he's feedingly disciplined in a way that when we go out and share some drinks and they bring the bill, if we are 4, he takes his phone and divides by 4, and everybody pays their share. Now, that was just to excite you a bit. I don't do that, okay? Because I also reserve some good level of, you know, esteem and class.
Yeah.
I cannot split the bill by 4. I'll pay it, okay? But it's because I know it's within the small spending, what I can call petty cash of my earning. If it's $1,000, I will not do that. So it's very important, my brother, to know your limits, know your means. You live within your means, okay? Know when you can spend small money, have some class, spend it, let it go, let it go, let it go, okay? But you don't go above your limits, live within your limits. And then leave the money to use on your current account, on your, whether you call it current, checking, or spending account. Protect the rest, take it away, hide it. That is what we call saving or investment, if you're ready. You know, sometimes you cannot just invest every month because you need to accumulate some money. Yeah. Take it away. So when you get paid, how much is going away? Take it away. Okay. So I'll tell you another plan which I've ever used. I used to be so bad at saving. So what I did was I took a loan and I made sure that 50% of my money, they will take it. But I invested it in something which is valuable. So every month, before money gets to me, when my salary hits, like I get SMS, in the next second I get SMS of money, the bank taking the money. But I say, okay, that's fine. I have my asset. So I have to fight with this bank, pay off the loan. How did that work for me? Having a loan is painful. So every night I'm trying to see how do I get this damn loan. Okay? Different when you're just having your friends calling you and you're spending. But you have to be that person who doesn't have the discipline like how I was. If you are lucky and you have the discipline, you don't need to even lose your money with the bank. Get your salary, put your money on the side. I tell you guys, I have another friend of mine. I wish one day he could come and share with you. That guy was investing 80% of his salary. This is not some myth I got in a book. 80% of his money. He stayed in his line, lived in the same house. He dresses nice. He's decent. He doesn't buy a car because the company provides a car, yeah, which takes employees to work. And he says, I'm not special. I'll sit in that one. Still decent. He looks nice. He holds a normal phone. He saves 80% of his salary. He gets 40 million Rwandan francs, which is slightly lower than $40,000. Takes it to a bank. They give him a loan. He buys a house. He pays it off. He's now going to a third property. He is that disciplined. I'm not his level. I respect him. If you can be disciplined, I am answering the other question already in terms of the percentages. Who asked it? Tanga from Zambia. In terms of percentages, they are good practices, okay? Where they say, third of your income could be what you give if you're taking a loan or if you're spending. You should remain with the other remaining part, which is 70%. And in a way, it's like saying, okay, you invest 10%, you spend another and then you use the rest. So how much you spend and how much you invest. I don't want you to start from those numbers. No, I want you to start from your life. How much does living the life you live cost you? Not the life you desire everywhere, the normal minimum life, okay? You live decent, you don't sleep in a leaking house, you have power in your house, you dress, you feel comfortable with yourself, you don't, you're fairly, you are a normal citizen, yeah? You're not here, you're a normal citizen. If you think about your life as a normal citizen, how much will your house cost you? How much will your food cost you? How much will you reserve to have some life, a few days and go out with your friends and celebrate? And how much do you have? There's what we call, for those of you who are out of Africa, I'm sure Enoch, if you know something, it's called an African tax.
Yeah, black
who
tax.
have African tax. Yeah? So if you know your African tax that you need to do, you have your extended family that you must take care of, put that on the side, and you say, how much is remaining? Can I save it? Can I put it away? You try 1 month. How does it work? It works. Then go ahead. So the best way to know how much you spend, or how much you save, how much you invest, look at your life as a normal citizen, how much your life costs you, spend the rest. You don't keep money on your account sitting there. I used to have the idea of looking money on my account. That took me so many years. And right now, I don't care. I can have on my account very little money, but as long as I know shopping is done, my family, food, everything is taken care of, and I don't really mind that I don't have money on my account. It's not a problem. I'm not trying to prove a point to anybody. You have to grow beyond that level. I hope I've answered your question. Then the last one, because the clock is ticking. It was Ankunda who talked about the vintage cars. It's not a very familiar concept to me, but I can tell you whether vintage, whether Porsche, whether anything, the cars, there's only one asset I know as a finance professional again, it does not depreciate. It's called land, okay? All the other assets, motor vehicle, machinery, furniture, buildings, everything depreciates. Remember, if you're a finance person or if you are growing your finance profession, we finance people. If Enoch has a building in Kigali, we don't consider that house as the property. We report the land separately and we report the building separately. Because the land appreciates, the building depreciates. So land appreciates, building depreciates. If you detach your building from your land, building depreciates. The car, anything that you spend money to keep it moving, that is not appreciating. How many people do maintenance for land? No. And if you ever do maintenance for land, if you ever do, you put some terrace and you make it better, that land will increase in value by twice. This is the power of land. But if you take your car and you change spark plugs that are old and you put new spark plugs and everything, it does not make that land, that car, brand new. Because the year of manufacture will not, a car is like a person basically. Okay? It's manufactured when it's born when it's manufactured and grows and gets old. So as it is aging, our earn potential is reducing. It's like our health and our lives. So that's what I can say. So I hope I've covered the points and try to address the questions. Oh, there was the issue of overpriced real estate in Uganda. I can tell you the real estate is overpriced everywhere. Okay, maybe you need to get out of Uganda and get to West Africa. You will be shocked. In my country, I thought real estate was expensive. Where I am now, real estate is 4 times more expensive than in my country. And within Africa, you ask yourself, how is it happening? The more it is expensive, the more it will cost you to buy, the more you will earn. That's how the cycle of money earns. Big spenders, big earners. So what you do is, if you can create time and build your own property, that would be the best. Okay, because you design it well, you do everything well. But there are caveats. There are times, every day is not, life is not as easy as that. I wanted to build my house, but I didn't have time. And I knew those guys who build were they were going to steal my money because I had to focus on my job and I was working 12 hours a day. So I asked myself, what do I do? This guy who's selling me the house is making from me an additional $45,000. I know it. But this guy has labor to build the house. The only worry I would have is, what if it's poor quality? So when you're thinking about property, you can create time, find a nice architecture, find a way if your bank can help you, because to build house, you need hard cash in your account, remember. So if your bank can provide a solution and you can create time to supervise it and do it personally, build your own property. If it's not possible, do like what I did, accept that you don't have the time, find somebody who has the time, who has done it, give them money and concentrate on making money, which you have time that you have signed up for.
Wow.
Thank you.
Please appreciate Francis. Yeah, appreciate Francis. You can use an emoji, everything you can use. So Francis, your final thoughts. At African Rebirth, we give 1 or 2 minutes to our guest to give that magic word that even if you forget everything, you won't forget this one. What's your magic word tonight?
Yeah, my magic word is young people of Africa.
Yeah.
Financial literacy is part of you, of our lives, whether you like it, whether you don't like it. And if you don't focus on financial literacy, you will pay the price even in your old age. The earlier you do it, the better. Every day when you wake up, stop thinking about things that will take your money. Every day when you wake up, ask yourself, how do I get rich? How do I become rich? How do I become rich? Every day. If you ask yourself that question every day, and you start identifying people who can help you to get there, you will see changes one step at a time, and your life, your discipline will change.
Amen to that. Thank you very much, Francis, for the wonderful and excellent session. And this is like you said something that has resonated with me, saying like you can do whatever you want to do, you can be a speaker, but the equalizer is how you improve finance. The equalizer is how you improve money. The reason why we're focusing so much on finance is this is part of the neglected topics. People will talk about politics, talk about business structure, but they don't go detailed to finance. Finance is very key in Africa's liberation. And most of our countries have issues with aid. The reason we have aid is that we don't have a strong financial muscle. And so the next frontier of leaders of Africa, you're going to have to be wealthy. You're gonna desire wealth. You're gonna desire property. You're gonna desire a wealth that exceeds generation. So this is very key to Africa's liberation. You can have good policies, but without the muscle to finance your policies, you're just a dead dreamer. And the next frontiers of young people who want to African rebirth, and the next of Africa is people who are financially free. That's when it's you. Before the nation becomes free, you're first to be free. You have to be financially free. And this is a seed. We will not give you money. I promise you that. We won't receive some cash dollars, but we are giving you a seed beyond money. We can give you 10,000, but you have capacity to make billions. We're giving you a seed to make billions of money. So thank you very much. It's already 6:30 past now. So we want to end it here and call it a good weekend. But before we end, want to take a selfie. Please, can you show your faces up? Gonna be memorable this session. Show your faces up. You have good faces. Put your cameras on. We take a selfie and we say goodbye to a weekend. Hello. Okay. Please show your faces up.
Goodbye. Okay.
And
It's me, Mikias from Ethiopia. Goodbye.
Okay, show your faces up.
Goodbye.
Take a selfie and go. Yeah, take a selfie. Anyone taking a selfie? Take a selfie. Take the best. Take the best.
I already taken it. Thank you.
Oh, perfect. Awesome. Thank you very much, everyone. Have a very wonderful weekend. Our next session is next Saturday. Come in, learn, ask good questions. We'll see you next time. Have a good one.
Yeah. Bye-bye.